What's up, everybody? Welcome back to another episode. Sorry, it's been a while, but I've been busy. Let me tell you what's going on today. We hit 10,000 earlier this morning, backed off a little bit, but what's price going to do in the next couple of days before the halving? I will let you know. Billionaire, another one, buys Bitcoin and says it's the best hedge against the economy. Bitcoin to 1 million, says Raoul Pal. We will see what that's all about. And will Bitcoin dump after the halving? Guess what? The jobs report came out today. Another 3 million unemployed. Right now, 1 in 4 Americans are unemployed. How will this affect Bitcoin price? And some charts that may back up my evidence when I say that the economy 1.0 and 2.0, as in finance 1.0 and 2.0, have some scary days ahead. Stay tuned to find out what I'm talking about. And let's jump into it.
Hey, what's up, everybody? My name is Kyle Chasse, a Bitcoin and crypto OG since 2012. I quickly understood that Bitcoin and its underlying technology would change the world, so I went all in. I've built, invested, and advised many projects in the space and consider myself an expert generalist. In 2018, I became very concerned about the misinformation going around the cryptosphere and felt that someone needed to speak up, educate, and assist the space in evolving in the best possible way. I made a decision that I would be more public, speak out against misinformation, educate the world on the most important things about Bitcoin, crypto, and blockchain. I've been traveling the world, speaking at conferences, and working with the best minds in the space to innovate the systems that we grew up with in order to improve the quality of life for the global citizens of Earth. Welcome to my channel.
Hey, what's up, guys? All right, so let's check this out. So everything is doing really, really well right now. Bitcoin did go over 10,000 briefly, bounced back down for a little bit, got rejected, but I am pretty confident that before the halving, it's going to definitely go past 10K. I'm thinking it's going to get toward 11K by the halving. But check out the markets; they're doing really, really well. Let's see, is Monero still up? I think Monero was up earlier. One of the ones I said, it's doing pretty good, 5.67%. I am pretty bullish on Monero in the long run. Anyways, you can see the market's all green. A lot of bullish sentiment. Yeah, that's that one. Okay, so check. Oh, one more important thing to note. Look at Bitcoin dominance, 68%. This is a bit different than people expected. Usually when we see nice bullish sentiment, altcoins rise more than Bitcoin, but Bitcoin is dominating the market again. I think just like last week or something, it was 61 or 2% dominance. So Bitcoin is really becoming the king crypto. I mean, it always has been, but I mean, this is solidifying it. So check this out. Billionaire Paul Tudor Jones, my bet is it will be a Bitcoin as a best inflation hedge. So this guy, Paul, billionaire with about 5 point something billion, basically publicly came out and said Bitcoin is the hedge against the U.S. economy and what's going on right now. I think that I would definitely agree with him. Most people would. It's not only been this guy, but also other people have been saying, Bitcoin, 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 institutions putting out Bitcoin reports. I mean, everybody is really, really, like, it is really getting widespread. Just Bitcoin is going on everyone's radar right now. People are coming out publicly about it. I really think that maybe we're in for a super cycle here in the next bull run. Anyway, billionaire investor Paul Tudor Jones made a prescient call on bullion in 2019, and now he's saying that Bitcoin, the controversial digital currency, reminds him of gold in the 1970s and may be the best bet hedge against inflation as in the age of coronavirus. He says, if I'm forced to forecast, my bet will be Bitcoin. I mean, this is becoming so obvious, everybody. Like, obvious. Bitcoin is the most hard money in the world. It has a very, very, very finite supply, and it's better than gold for so many different reasons that I've covered before. Anyway, the famed hedge fund investor, writing in a recent research note, cited unprecedented money printing and stimulus measures by the Federal Reserve and the U.S. government amid COVID-19 pandemic are key reasons behind his newfound appetite for the world's most prominent cryptocurrency. So, listen, there's just not a lot to talk about here, other than the fact that, like, more and more people are publicly coming out and saying that Bitcoin is what they're betting on, right? Jones said that he would focus on placing his bets on Bitcoin in the futures market on the CME group, which is a stupid place to put your bet on Bitcoin, in my opinion. Why not just buy Bitcoin? Why do the futures market paper? It's stupid. But anyway, where Bitcoin futures for June touched a high of 10,155. According to FactSet data, Bitcoin futures based on the most active contract have gained 38% in the year to date and almost 70% over the past 12 months, outperforming gold by a huge margin. Okay, so that's that. Up next, Perfect Wedge makes $1 million Bitcoin more likely than ever, Raoul Pal. So, listen, okay, this is about, this is just another TA chart, which I think is ridiculous. The only one I've seen that I think makes a lot of sense is the stock to flow ratio, which is kind of why I covered this one, because he goes in line with stock to flow ratio, right? But he says this perfect wedge, blah, 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 which, I again, if you know me, I don't buy into technical analysis, but here's a chart for those of you who like it. Stock to flow strength versus fiat collapse. The sky high figures fall in line with similar findings by Plan B, creator of the stock to flow Bitcoin price forecasting model. Powell referenced the model's findings, which give an average BTC USD value of 288,000 between 2020 and 2024. That's a pretty big margin, with the potential to at least double that as a maximum. So he's saying, Bitcoin can go up to 576,000 or whatever. My guess, like I said on another video when I talked about when I put out that free dollar cost averaging calculator for you guys, my guess was between 250 to 300,000 at the end of the next bull run. And that's pretty in line with what I said. So anyway, and just to kind of finish this piece off, added to that, the entire world central banks are either seeing their currencies collapse to the almighty dollar, or they are printing money like crazy. Huge quantitative easing. Fiat meets the hardest money that automatically quantitatively tightens. BTC for the win. Okay, guys, here we go, talking about some halving and what's going to be happening. So this is just talking about a poll about most people. This is a sentiment in the market. A poll surveying over 15,000 people suggests that the majority believe Bitcoin's price is likely to dump at the halving, as the halving happens, and skyrocket later on. This coincides with the behavior of the cryptocurrency following the previous halvings. Okay, so those of you who don't know or haven't been around that long, everyone always says buy the rumor, sell the news, right? What that means in this situation specifically is buy the rumor, which is basically pre-halving. Everyone's buying right now. Markets are really hot. And typically, whenever we get the news or whenever the event occurs that the rumor was talking about, we see a price dump, right? And so this is just a survey here. This guy, Don Alt, at Crypto Don Alt, asked a survey to his people. Over 10,000 people participated, and 47.8 people believe there's going to be a dump as soon as the halving is here. And 26 people said sideways, and 26 people said pump. I happen to also agree that there's going to be a dump afterwards. Not based on anything, not based on Corona, not based on the economy, not based on anything else other than just like what has happened historically, and the fact that I think markets have been getting way too hot lately. We're kind of due for a pullback anyway, and historically we haven't seen crazy bull runs or parabolic movements up until 4 to 12 months after the halving. So I think because of the uncertainty in the market, especially with the way the economy is and things like that, this was obvious for a lot of whales and things like that to run the price up for the halving. I mean, it's so textbook, and I think people are going to take profits right like the day before or day of the halving, and I think there's going to be a dump. I don't know how big it's going to be, but then I think that things will start eventually moving back up. However, I'm about to get into the part where I talk about again, the correlation between traditional markets, stock markets, and things like that, and the crypto market, because I do still believe there's the strong correlation because most of the Bitcoin investments right now are speculative. And as we just talked about a second ago, people are going to pull out to cash, the dollar, in these troubling and uncertain times. A lot of people are advocating to pull out to cash. Even Warren Buffett has a massive pile of cash sitting on the sidelines waiting to buy in. Okay, so this is a chart I just pulled up. I thought it was interesting. This guy, Todd Butterfield, seems to have a lot of followers and people that believe him. Again, I'm not a fan of charts. However, for those of you who are, this is talking about the Elliott wave theory. And this guy believes that, that there's going to be, after the halving, there's going to be a dump to approximately 5,800, and then moon's the limit at that point. But interesting, if you look close enough here, April, May, September. So he thinks that during the month of May, there's going to be, this recline. And then as soon as we hit September, boom, sky's the limit, baby. So we shall see. I mean, I think that this is a likely scenario here, this 5,800. However, I feel like it's going to correlate with the dump of the stock markets, and I don't know when that's going to happen. I think September seems to be a hot hypothesis at this point for traditional and crypto. And historically, we have seen markets getting very, very hot for crypto in October, November, December. So this would seem to line up, right? We'll see what happens, but this is just kind of, I feel like that has some historical accuracy, and could be the case here. So jobs report came out today. We have another something like 3 million people unemployed. I think now the current number is up to 33 million. 1 in 4 Americans are unemployed. So a lot of people are saying, they believe that the economy is opening back up right now, right? And that's a good thing, and that a lot of these jobs will come back, and that we will see a V-shaped recovery. I will tell you why I think that's highly unlikely, but let me just first get into this jobs report and what's going on. So the unemployment rate leaped to double digits from a 50-year low of just 3.5% 2 months ago, but the share of idled workers is almost certainly higher. A broader measure of unemployment that includes discouraged job seekers and other people on the fringes of the labor market skyrocketed to a record 22.8%. In 7 weeks since the virus shut down much of the U.S. economy, more than 33 million people have applied for unemployment benefits. The numbers are still growing by several million a week. I mean, that is down here. It talks about the 1929 depression and the unemployment rate. I think they said it was estimated. Where is it? Although the government didn't keep track back then, economic historians estimate unemployment peaked at 25% in 1933. I believe that we're actually probably higher than 25% right now. There's probably there's a lot coming up. If not, we will hit it extremely soon. Big picture, the U.S. has already sunk into a deep recession. It's hard to believe, considering the stock market is still due and strong. The U.S. has already sunk into a deep recession. Many states are trying to restart their economies with the encouragement of the Trump administration to try to limit the damage and prevent the job losses from becoming permanent. Yet these efforts could founder if the coronavirus begins to spread rapidly again, which it will. I'll show you why. The lack of a vaccine or other treatments could also force Americans to practice social distancing for the foreseeable future. Such a major change in behavior would slow a U.S. recovery by making it hard for many businesses in key parts of the economy, such as travel, leisure, sports, entertainment, to return to normal. So, massive unemployment, and it's still going to be coming, right? So a lot of people are saying, like, but the jobs are going to return, economies are opening back up, and blah, blah, blah. But check this out, okay? So this troubling chart might change your mind about lockdown restrictions. So you don't need to go into all this, blah, blah, blah. He just talks about, states opening back up and da-da-da. But check this out, okay? So this pattern doesn't seem ideal, obviously. In opening states, cases are already increasing. Change in the 7-day average of the new confirmed coronavirus cases by category relative to the 7-day average on April 5th. So look at this. This is the number of new cases. Restricted, cases going down, meaning not opened. Here we go. Planning reopening. Yep, dropping. Not reopened yet, but partial reopening. Look at this. Increase in the last 7 days of new cases. So what does that mean? That means that people, they might reopen, but people are going to be afraid to go outside. Business might be open, doesn't mean they're going to have customers, right? Or if they do have customers, it's going to be significantly less than they had before. And that's still not enough. If you have a business that has 50% less business than it had before, 60, 70, 80% less business than it had before, it's not going to be able to cut it, right? It's not going to be able to maintain, it's not going to be able to survive. And this is going to keep going until, until people are stop being scared of this coronavirus. Like, the mainstream news is horrible. It is scaring the living daylights out of people. And people shouldn't be scared. What you guys should be doing is boosting your immunity, like working out, eating healthy, taking vitamins, boosting your immune system, and going out there and just going for it. Like, if you're healthy, you're going to be able to fight this thing. If you get it, it's going to be like a flu. It's going to go away. It's not going to be a big deal, right? And that's just the mentality everyone should have. But instead, the media is scaring the living daylights out of people, right? This whole COVID thing is no worse than just a regular seasonal flu. Granted, if you are super old or vulnerable, yeah, like, I would be careful. But if you're not, like, just it's crazy. But anyway, yeah. So check this out. Okay, check out this survey. If stay-at-home restrictions were lifted, would you be comfortable going to a bar or restaurant? 29% yes, 71% no. Would you get on an airplane? 15% yes, 85% no. A large event? 13% yes, 87% no. This is a poll of Americans, right? And this clearly demonstrates that people are terrified to go back and participate in the world again. The implications for this are tremendous. 70% of people are not going to go to restaurants because they're terrified to get COVID. That means that even if a restaurant maintained or had 30% of the 30% of the normal revenue, a restaurant is hard to generate profit from as it is. If you have only 30% of the normal business, you're not going to be able to maintain that business. You're going to go out of business. You're going to have to lose your employees. You're going to forego your lease on your place. Then you're going to see the commercial real estate or whatever opening up. That landlord is going to have a hard time paying their mortgage on the property. And then the banks are going to start foreclosing. We already have a real estate pandemic where, like, the real estate markets are about to go belly up. People aren't paying their mortgages, which means banks aren't going to be receiving their money, which means they're going to have to repo these things. It's a whole spiraling thing that's going to happen. This clearly demonstrates that even if we have opening back up of the economy, it's not going to do much. And all the traditional stock markets are banking on the fact that these openings are going to restore the economy, but they're not going to, right? It's not going to be enough. If the media wasn't so crazy about this, then maybe it would. But as we see here, people are terrified. The news is scary as shit. People should be watching it, right? It is scary. And it's terrifying people. And they're not going to be going out and spending money at businesses. They don't have any money to begin with because they don't have jobs. So it's just, in my opinion, we are going to see tremendous economic losses. The worst hasn't even hit yet. And the stock market can only be propped up on government bonds or government funds for so long before it's just too much to handle, and it will collapse, in my opinion. I mean, I don't know how big, but I think that it's going to happen. And it seems like this news that comes, keeps coming in. It's insane to me that the markets are doing as well as they are. And I imagine that eventually everyone else is going to see it too, or see it or not. It's just, there's nothing you can do when everyone stops spending money and the economy just dries up. Eventually, these businesses are going to have to go bankrupt. Eventually, it's going to have to hit everything, and everything's just going to collapse. Just my opinion. And finally, just this heat map over here, you can see, I mean, it's going to be interesting to look at these charts again in a week, right? But if you look down here at the new daily cases, like, it is not slowing down. I mean, we have had more yesterday, 93,000 new cases than we have had in a long time. right? And that's maybe loosening up social distancing, stay-at-home orders, whatever. But it's going to increase, and it's going to scare people even more. All right, guys. Well, I guess just one more thing to wrap it up. Like, I am extremely bullish on Bitcoin and crypto over the next, in the future. I do agree that it is the best hedge against everything that's going on right now. I just want people to be aware that we're likely to see a dump after halving, and you know, but that's a great opportunity to buy in. If you guys are wondering if you should be buying Bitcoin or not, the best thing to do is dollar cost average, and I made a video about that. Maybe I'll put it in the end here, and you should check it out. It includes a free dollar cost averaging calculator that I made for you. Anyway, guys, thank you for tuning in. Please subscribe and like; they'd be greatly appreciated. Click those buttons down below, the bell button. Again, sorry I'm not making content every day like I'd like to. I'm just extremely busy. Like I said, I've got a couple companies I'm running, trying to open a blockchain co-living, co-working hub out here. Check it out, houseofdao.io. Also, trying to save the cryptocurrency exchanges, exchangealliance.io. Check that out. Been doing some interviews, conferences, been doing panels. We'll start posting some media and things like that I'm doing. Been doing some news articles, things like that. So anyway, guys, thanks for watching. I really appreciate it. And I'll talk to you guys soon. Take care. Bye-bye.